Hey everyone, Albert Pavon here with Pavon Realty Group with our special guest, Kevin Coleman from SWBC. Is it SWBC Lending or
SWBC Mortgage Corporation.
Mortgage Corporation. I should have known that.
I'm just Kevin.
Yeah, Kevin Coleman with SWBC Mortgage Lending. You might have seen him in our previous videos, but after being in this insane 2020, I wanted to bring him back because we have a lot to talk about. Kevin, welcome. Thank you for coming back.
Thank you for bringing me back.
No worries.
How's everybody doing?
Kevin, most importantly, 2020 has been a rough year. With COVID hanging around and the way everything has been, there's been a lot of talks about a possible foreclosure market, a lot of people being laid off, unemployment numbers are high. First, I would like to talk about forbearance.
Yep.
What are people's options if they can make their mortgage payments? I know that it's all different across the board, but maybe give us a couple of
just to rewind a little bit, back when the pandemic started, there was an act passed called the CARES Act, to where that if you were having difficulty making your mortgage payment, you could go into forbearance, basically not making your payments and not being penalized with credit loss and things of that nature and such. So fast forward now to the end of 2020, and a lot of people are looking to come out of forbearance, get back to making mortgage payments and everything else. We want to offer programs to where that we can get back on track and do mortgage financing again, beyond in the future. So for example, if you have a loan that's been in forbearance, SWBC, the company I work for, offers a bunch of various options. And I highly encourage you contact your mortgage servicer to see what's available to you. But in terms of if you were looking to do new mortgage financing after coming out of forbearance, there's a few different ways to make that possible for yourself.
So you mean look, if you miss a few payments, you're finally back to work, things are rolling, and they're wondering, hey, can I buy another house?
Yes, absolutely.
This is what you're referring to. What they could do moving forward.
Yep.
Okay.
So option A is the hardest option, but it is an option, is you can contact your mortgage servicer, remove your loan from forbearance, pay whatever the balance is that's owed, and move forward, and you can look to get new mortgage financing directly after that takes place. Option B, you can contact your mortgage servicer, take your loan out of forbearance, and look to set up a new payment plan. After you've made...
So with the payment plan, do they take the amount that you were in forbearance with, roll it up into the
That's a
loan?
good question. So everybody's going to be different. I wouldn't be able to tell you exactly what's going to take place, but when you contact your mortgage servicer, they're going to set up a payment that is going to fit your budget, I would assume, and it hopefully is going to work on paying back some of the balance. It could be the exact same payment that you're accustomed to. Once you make 3 consecutive payments out of the forbearance plan, then you're eligible for financing again. You could A, look to purchase a new home if you were selling your home and looking to do something new. B, you can look to refinance your home if you're looking to refinance. And in a lot of cases, if there's a balance that was owed previously, you can look to try to incorporate that into the new loan amount. There's a third option also. You contact your mortgage servicer, remove your loan from forbearance, and then try to work on a modification to your loan. Once you work on that, you'd make the same 3 payments, and then there could be a permanent modification. It's just, main thing I want to focus on, don't not do anything. Contact your mortgage servicer, stay in contact, and come up with a plan.
Well, from my understanding is they want to help.
Yeah, absolutely.
So it's
definitely.
Not like what we saw before where they were just running to the courthouse to
No,
foreclose.
absolutely not.
So
Definitely not.
I feel like this time around, hey, we learned our lesson.
Yep.
Because we both were around during those times, and they do want to help people.
Absolutely.
So you would agree with that?
Yes, I would agree 100%.
Okay. So, and I'm just curious, right? If they missed a few payments, they can't refinance at that time. Is that correct?
Not right away. You've got to get out of forbearance first and set up a plan.
So they have to catch up, and then they can refinance.
Well, not necessarily catch up. It's make 3 consecutive payments based upon whatever payment plan you set up with your servicer.
Okay.
After those 3 timely payments are made, then you can definitely look into refinancing at that point.
Okay. Thank you for clearing that up.
You're welcome.
I appreciate that. So it still has, I mean, with that aside, rates have still been extremely low.
Yes. As I'm sure everybody sees on the news, rates are at record low levels, which is excellent.
So let me ask you this about interest rates. So if you're applying for a 30-year fixed, I know the rate will be X. But before, if you were applying for, let's say, refinancing for a 15-year, there used to be a big difference in the interest rate. Is that still the same case?
It's very close. There's a difference between the two. I've actually encouraged I've done a lot of refinances this year out of 30 years into 20 years.
Oh, okay.
Not a lot of people do 20-year loans, but I highly encourage it if possible. And the reason being is if you were to have taken out a mortgage in 2017 or 2018, possibly even through half of 2019, there's a lot of cases to where that you can look to do a new 20-year, keep your payment relatively the same as it was before, and shed 7-8 years off of your mortgage.
Are people doing it to get rid of their mortgage insurance?
Yes, that's definitely popular as well.
So, well, for the people out there, what exactly is mortgage insurance?
So, PMI, mortgage insurance.
Some might know, some might not know.
So it's not there to help you. It helps the mortgage lender. Basically, in reference to if you do a lower down payment, 3% down, 5% down, 10% down, you can get a mortgage, and there's private mortgage insurance you include in your monthly mortgage payment in most cases. And basically that protects the lender in case of default. If you not to make your mortgage payment, there's an insurance carrier who will protect your lender in that instance. Once you've built the 20% equity in your house, and there's other ways too, but we'll just reference 20% equity, you can look to refinance your existing mortgage to a mortgage that no longer carries mortgage insurance. So for example, if you had a $250,000 loan and $100 monthly was your mortgage insurance payment, now you've got the 20% equity built in your house. Not only can you take advantage of today's mortgage rates, but you can remove that from your payment, effectively reducing your payment by more. And that's helped us do the shorter term loans to help pay the loan off faster.
Very cool, very cool. See, all this cool stuff about lending.
We're always trying to build equity.
No, I appreciate the information. So, guys, if you are in a tough situation right now and you've been laid off, there are options for you. Don't just do nothing, right? Call your service provider or call your lender. Ask them what your options are. Just make sure you do something. I think this time around we're not going to see this huge foreclosure market. Everybody keeps asking me about when's this next bubble coming. And in my opinion, I have no crystal ball, or at least not here that I'm showing you guys, but I do not see a bubble coming where we're going to have another foreclosure market, God forbid. So, would you agree with that?
I would actually strongly agree with that. And we could go into other details, but there's just the supply and demand. It's just not there to have a strong foreclosure market, in my opinion.
Absolutely.
Lenders are trying to work with, borrowers to help ensure that they retain their home ownership. Rates are low, equity's built up. The dynamics are completely different.
Different market, 100%. So everybody, if you are in a tough situation, call your lender. Call them and ask them what your options are. Don't just do nothing about it. They do want to help. I would tell you, pick up the phone, give them a call, see what helps out there. Hope you're really enjoying this information. Stay tuned for our next episode. We're going to continue talking about some more lending and what you can expect in 2021. Thank you.
Thank you.